Vineet Agarwal joins us now, Managing Director of TCIL. Vineet, morning. Thank you for joining us. What is your experience at TCIL? Are you completely inelastic to what happens to crude prices at the demand front or at a margin front?
Hi. So yes, what happens is that in the last several years that we've been building the business, we realized that both GDP growth or such shocks like the fuel prices used to affect our margins. And so we've been constantly building different businesses, which helps us to sustain growth and sustain margins even with these shocks. So we have been able to do that in the last decade and so. With the supply chain business growing, the seaways business growing as well. So I would say that we are getting to that stage of being mostly neutral to the movement of freight, movement of fuel prices. But of course, sectorally or in certain businesses, we do feel some impact, typically with a lag, but it does play out over a period of 15 to 30 days that we do get back most of those increases. Also, things like India being an agrarian economy in many places, fuel prices also have an impact on the freight rates for agri products. For example, this year mango season was very good from the south. So we had a tremendous increase in freight prices ex-south, which typically never happens. So these are some vagaries with the Indian conditions as well that we have to keep working on.
How does the pricing work? Is this dynamic or these are long-term contracts where it doesn't matter what the crude prices are, you will get into long-term contracts for your own trucks and for the trucks which are managed from outside?
So we are mostly working on contracts, and the contracts are typically with let's say you decide on when you sign the contract, there's a fuel price, and there's a trigger with a cumulative increase of, let's say, 5%. It will lead to an increase in our rates as well. And if there's a cumulative decrease of 5%, we will have to bring down the rates as well. So now, since it is mostly contractual, there could be a delay in terms of when we finish the billing and we submit it to the customer and he pays us. But otherwise, we mostly get back most of the increases.
Okay, so let's put numbers into this, Vineet. What is the kind of improvement that we can see in your overall EBITDA performance in the second half because of the way crude is moved?
I think the second half is usually the better half of the year for us historically. The only thing that I would point out is the last quarter, the July to September quarter, has been very unusual in many ways. So last year, the same quarter, we had the implementation of GST. So that time, business actually came down because there were customers that were started to move towards GST, and it took them time to get their billing sorted and so on. So we had good growth in Q2. However, we also got hit simultaneously because of the Kerala flood, because of the trucker strike in July, and also because of the festival season being slightly delayed. So all of this did have a negative impact as well as some positive impact because of GST. So H2 of the year is usually better for us, and I think on an EBITDA margin we should continue to see growth, and we should exceed the full year EBITDA margin that we had last year by 25-30 basis points.
That's interesting to understand. Could you assess for us in terms of the supply chain? About 25% of your truck fleet is owned, and in the transport business it's about 10 to 15%. Rest is managed through annual rental contracts with vendors or spot hire. How has this model, which is somewhere between asset light and asset heavy, helped you manage fuel price fluctuations in the past?
So this helps us because if you are a complete asset owner like some of our competitors, you incur the cost of fuel right away. So you have to, you're running the trucks, you have to buy fuel today, and so the impact is immediate. And so you get hit there as well. If you're a completely asset light, your vendors tend to dominate, where the vendors will tell you that, okay, this is the price, take it or leave it. Being in the middle somewhere, we are able to command better pricing by actually telling vendors that, look, let us balance this off. If some vendors insist that, no, we need to increase fuel prices, we can always try to bring our own trucks in as well. So So that balance helps us to keep our costs under control. And this has worked for us. We are a 60-year-old company. And looking at these trends, I think this is also, I think customers feel a little bit more secure when they see that we've invested some assets for them and they're able to sustain businesses. So we have some skin in the game with them as well. So overall, this has helped us in the long run.
Vineet, away from the crude topic, what is your understanding on the freight movement? Because you, in a sense, have the perfect gauge of where the economic activity is. Could you tell us that how demand trends and freight trends are looking and which category is witnessing the maximum uptick?
Yeah, so interestingly, I think in the last quarter, as well as now going forward, we've seen business to be robust overall across all sectors. Especially in some of the SME sectors. We've seen certain kinds of engineering product companies doing relatively well. We've seen consumption-related companies doing good. Apparel companies are also doing relatively okay. So I'm talking about the companies that we typically work with. And generally speaking, there is no let up in terms of demand. Our anticipation is that this should continue, except for perhaps the last quarter before we hit the national elections, when things might cool off a little bit. But overall, we are seeing strong growth across sectors for us.
Appreciate your time. I know you're a bit under weather and yet you took time out to join us. So thank you very much. Really appreciate that effort.